Louise Bedford here. I am your host of the Mind Over Market segment, and my co host is Jordan Mallard. Jordan Mallard, welcome to the show.
Thank you, Louise. Good to be back.
This is how traders think. Now, for today, we have got an amusing little topic. It is the key things traders muck up. Now, there are so many things that can go wrong when you're a trader, so many things that you can just step on the same rake twice, as best selling author Dr. Alexander Elder told me at one stage. He goes, sure, you've made a mistake, but then smack, there it goes again. It takes a while to reinforce. So, one of the things that I think is a really good way for people to not only refresh their knowledge about about the markets, but also to get that instant pep me up before they trade is to look through the shorts on this channel. Now, I know some people haven't even looked at these, they haven't even realized that they're there, but they are such a good resource. Whenever we can get small little grabs of information, it's surprising how quickly that can filter through to the subconscious and make a big difference. Now, Jordan, I was surprised that people didn't know that shorts existed. So I'd love you to give a little demo about how to access those shorts so that everybody can benefit from watching those 1 minute wonders just to give them that pep up.
Absolutely, absolutely. If you guys head over to the YouTube page here at Trade Delicious, now what Louise is referring to is essentially like a highlight reel. Okay, so we have this long form content where we sit down and we gruel into it, but you might just need that extra little reminder or the key point. And what we do is we cut that up for you in a nice, concise 30-second to 1 minute segment, and we put heaps out per day for everyone. So what you want to do is you want to head to the YouTube page, Trade Delicious TV, at Trade Delicious here, and there's two options. You can either scroll right the way down through the beautiful content in which we have, down to this short segment here, and then you can flick through, but we're uploading about 6 per day. So you're going to want to make sure you can see a little bit more of this tab right here, say shorts. This is also uploaded on TikTok and Instagram as well. If you're on those platforms and you still want to see more from us, you can hit that shorts button and there you go. You can sort them however you want to sort them, and you can scroll through the wonderful amounts of little tips and tricks in which our team are constantly delivering for you guys.
Fantastic. Look, I think it's such a good way of having that instant reminder as to what that long form content is actually conveying. And we always love to see your comments as well. Tell us that you're there, tell us the things that you want to hear about, and make sure that you are engendering that community that we are looking to establish. It is so important to feel like you're part of a bigger purpose, because this is a movement. This is something that has taken a long time for us to realize how important it is that we are not all trading individually. I don't know, Jordan, when I first started trading, I had no idea how important support would be. What did you think?
Yeah, I agree. I agree. I don't put words into. I can't put words out to explain how important the community is.
So when I started trading, I looked a little bit like this. There was so many things going through my head, so many things that I didn't understand about the markets, but I could sense that people did know. There were people who knew about what was what. And I really desperately wanted to be transferred into somebody who looked like this. La la. Everything has come together for that person. And for trading, it can be you as well. Now, Jordan, I put you on the spot behind the scenes with this particular episode. We both
I got
came up.
warning.
You did. You did.
I got
Look, am
warning.
I becoming more considerate? What's going
I
on?
know. Look at this.
We both looked at the key things that traders muck up, and we came up with our own lists. Now, I came up with a list of 4. Jordan, you came up with a list of 4, and we're going to discuss these today. So I want to kick off with my top 2, because that I think will be fascinating, and then we'll flick over to your top 2. So here's the full list of my key things that traders muck up, and I will describe each of them. No archetype, stops too close, positions too large, and too many positions. So they're my top 4, but we're going to go into details soon. And Jordan, your top 4 are?
Yeah, I've got FOMO, right? The fear of missing out. hoping in positions, neglecting education, and not taking responsibility.
So we do have a few differences there, and I am really happy to say that we didn't come up with the same list. I do want to take on no archetype and stops too close for us to discuss first. Now, by archetype, I'll define my term. An archetype is your perfect trade, that absolutely marriage material, gorgeous looking thing that you wish you had been in, and it starts there and it ends there, and it is just behaving in such an understandable way. It has got patterns that you can read and understand, and it is something that you spend your entire life looking to replicate. Now, the traders that I've trained, the ones who have an archetype trade on their notice board behind their screens, or perhaps even in their notebook, or even in their trading plan, tend to do the best. They know what they're looking for. They are honed in terms of selective perception because it's in front of them all the time, so they've got that reinforcement. And once it comes up in real time on their screen, then they go, da-dum, it's like a template match. It's almost the way when we were kids, we used tracing paper and we traced over a work of art. We looked at it on the tracing paper and it was just, oh wow, we just
Jeez, what a
created this
flashback.
amazing piece of Mona Lisa. But of course, there was the original one behind it. That archetypal concept, I don't know why, but people resist me on this. They go, I'll know it when I see it. When I see the perfect trade in real time, then I'll jump. But never have they signified when they're going to jump in. Never have they shown the patterns that they're actually looking for. They're not actually looking to show that perfection personified because it's too hard to choose. And once they choose 1 or 3 or 5 or however many they've got, they feel that they're going to miss out on opportunities because they're taking themselves out of the arena of trades that don't look like that. So Jordan, let's start with no archetype. What are your thoughts about archetypes? I don't know if you'd be familiar with the term because I think my business partner, Chris Tate, and I made it up. But now that I've described it, what are your thoughts about knowing what to aim for so that you are more likely to hit it?
It goes back to something we spoke last week about gut feel, right? And if you don't have an archetype, as you put it, if you don't know what that setup looks like, what it is you are actively looking for in there, then you're just going to be going off gut feel. So it's really important you understand exactly what you're looking to buy, right? It's as simple as that. You walk into a store, what is it you're looking to buy? If you're going with an idea, you're probably in and out of there very quick and you're probably successful shopping trip. If you're going in there to browse, depending on the person you are, you might have spent too much money and you might be leaving 5 hours later, wasting your time, right? It's a good analogy.
Absolutely. So, the analogy that I have as well in my mind is that when I was dating many, many years ago, I. I can't believe you get these stories out of me, Jordan. Oh, but I'm going to go there anyway. So, I used to have my own HR personnel business, which I ran into the ground and didn't know what I was doing with. But above my office was Mr. Graham Skinner. Now, Graham Skinner was a private eye. I'm still friends with him today. And he used to interview my potential marriage partners. And because he was so clever with assessing people, he would say, this one's for you, this one's going to be an axe murderer. Yeah. So I took his view about the archetypal mate that I should find. Yes, and it worked. It worked. It was a wonderful, wonderful strategy. So I can highly
Wow.
recommend making some sort of checklist and getting somebody to help you understand why that checklist is important to you. Now, the other aspect here is stops too close. Now, this is another thing traders muck up because I find when the primary trend is in place, if your stop is too close and you are out of that trend before it's had a chance to run, you are doing yourself a grave disservice. And I can almost say that that goes categorically. Even if you're a short-term trader, you'll have your own definition of the primary trend, and however long that trend is going to go, if you're not in it while it's continuing, then it probably means a stop is too close. Your thoughts, Jordan?
Yeah, I think the closer you pull in your stop, the more you're believing you have the pinpoint entry. And come on, like let's be real. How hard it is to get a pinpoint entry time after time. Don't strangle your trade. Don't strangle your position. Move it around, and there's different ways to play with that. You can look at hedging your position if it goes against you. You can look at where you put that stop loss, or perhaps gradually scale out of different positions with your confidence, but don't strangle it. Don't strangle it just for the sake of trying to get a bigger position size, or for your ego to be proud.
Yeah, absolutely. Love it. Now, Jordan, you've got the first two here on your list as FOMO and hoping. Tell us about FOMO.
Yeah, that's right. So there's a really specific area of fear of missing out that I wanted to talk about, right? And the reason I want to talk about is because it's happened recently. I'm going to share a bit of a story that we went through on stream, and how people have reacted, and why it's so important that we don't get FOMO. See, I recently had a position shorting the New Zealand dollar, and I like the position. I did the analysis, fundamental, seasonal play, as well as a trend play, technicals, everything lined up. I was loving it, and I sold it. Right, I sold it. I talked about it on stream, and I was like, "This is what I'm doing. This is why I'm doing it. This is what I see." And what I actually identified was a lot of people felt a FOMO, like as if they felt like I knew the market was going to do something, which I don't, right? I bet on probability. I've got no idea what the market's going to do. My risk management's in place. And when they listened to this analysis, they just had this overwhelming urge to get in. Right? It was never anything they were ever going to trade. It's nothing that they analyze. They don't even hold positions for as long as I'm holding them, but they need to be involved because Jordan said so, and Jordan's going to make money, and I want to make money. And it was a really, really interesting experiment to witness. That trade went on to lose, right? Wasn't it? It was just one of those losers. I win about 63% of the time. So 37% of the time they're going to be losers. And I just sat there and thought, why did so many people follow that? Why did so many people feel that urge? And it was a fear of missing out. I'd sold this position, and because they didn't do the analysis, but because I sold it in a way. Now, when I say sold it, I just spoke through it, but I'm passionate about what I do, so I tend to skirt it a little bit, right? And a lot of people jumped in, and it just made me realize that when you do hear analysis, other people's analysis, or you hear the ever "I told you so" people right out there that Twitter just seems to be full of, don't fall for it. Don't fear like you're missing out on an opportunity, like someone knows something you don't. Stick to your analysis, stick to your plan, because it's only ever going to consume. I've done it plenty of times before. This list of mine that I'm bringing forward are mistakes I've made. Okay, cryptocurrency, Bitcoin halving, little things like that 4 years ago, I fell for it. Right, I thought this was it. This is the. I'm trading cryptocurrency. I don't know the next thing next to cryptocurrency, but there I was allocating a part of my portfolio to something I had no idea in someone else's analysis. Newsflash, didn't work out. So I just want to really hone in, be a moron. Don't follow other people's analysis. Stick to what you know you're good at, and that's why I wanted to touch on FOMO. Hope
Actually,
is a fun one.
just before we
Yeah.
do move on, a few of the aspects here that make you more likely to follow somebody's trade. Let's talk about that. Perceived authority. Now, perceived authority is an aspect here, Jordan, because you're a perceived authority. People are looking up to you. You are an aspirational figure for so many people. So that does put more pressure on people to follow what you're saying. The other aspect here with are you more likely to experience FOMO with the trade is the person that is talking confident in their views? Now, we know from the studies that have been done with the stock market, but also with the financial services industry, that more important than the analysis is the confidence of the presenter. So that confidence blocks you out from any critical thinking. And Daniel Kahneman's views, fast thinking versus slow thinking, comes into play here. So fast thinking is that immediate gut reaction, I've got to do it. And slow thinking is where you're more critical and you wonder, maybe this isn't the right thing for me. So perhaps I could for everybody listening, if you could be encouraged to use slow thinking when anybody puts up a trade suggestion. That slow thinking will get you to analyze things to see whether it's right for yourself as a trader, whether it corresponds to your trading plan as well, and whether it's in line with your future objectives. So it is interesting that that did occur, but I can see why, because of the perceived authority and the confidence.
There you go. Interesting. I think this is good. We're learning. If there's one thing I can ever leave by through Trade Delicious, and everyone who watches this is going to know because I put it forward every single time, is my little motto, which is always ask why. Hands down. Anything you do, always ask why. Always question why, right? Last week we spoke on incentive bias. This is the same thing. If I'm sharing analysis, ask why. If you want to trade something I've analyzed, why? Why would you want to do something? And you might come to these conclusions, right? But question, why would you listen to me? Why? Always ask why. And I think that'll help people as well there. But the second thing I wanted to run through was hope. Now, hope is something I see all the time. Okay. More specifically, when people get into the set and forget range of trading. Okay. And that's where you've entered a position, the position starts to go against you. Okay. Perhaps something's changed. Perhaps the part of the analysis has changed, or what you were expecting to happen has changed. And a lot of people think, I've already allocated the risk to this. Let's just let it go and see what happens. And it pains me, Louise. It really, really pains me to see that. People will be told, they will be shown that, hey, your analysis is wrong. This isn't going to work out. Probability's changed. You should probably cut this loss. And yet they sit there thinking, I've already allocated the risk. Let's just see what happens. And I think it just extends so many losses. And when you have a look at a portfolio, you can see the people that are hope trading, because all their losses seem to be worth the exact same amount. There's never any cutting. There's never any shedding off some of the position size. It's just holding on, but then their winners are all over the place as well. And usually you see that equity curve going towards the downside. So I want to make sure no one else is hoping. If you're in a position and it's realistically your analysis has changed, things have changed, get into the habit of either cutting or at least shedding some of the position. Start with reducing some of that risk, and then eventually you'll learn when you should cut and when you shouldn't, but don't hope.
I like that. It refers to the sunk cost fallacy. Now, I'm not sure if you're familiar with this one, Jordan, but it's when you've put a lot of work into something. It can be anything, it can be a university degree, but then new information comes to light and you really need to change tack. Now, I've seen it in people who've studied for a degree. Maybe they've studied for a law degree, so it's prestigious. And then, then what happens is they go, law is not for me. I'm not interested in law at all. I want to be a writer or a potter or an artist. So they struggle to make that jump. That transition seems so much harder because they've put so much effort into their previous occupation. And that sunk cost is something that traders face in this exact situation. So we need to be divorced of the effort that it took for us to get to a point in order to allow the data to guide our decision. If we're not allowing the data to guide our decision, then we have to question, why is that? Is it because I've already put effort in? And that is something that I think is relevant regardless whether you're trading for 30 years, whether you've just begun and you've decided that a breakout trade is your utopia.
Yeah, absolutely.
Now, some of the other things that I thought were probably the key areas where traders muck up, their position sizes are too large and they have too many positions. Now, with the position sizes too large, I see that particularly with crypto, where if you ask Shane Kupfer, our crypto expert, if you ask Shane how much money in terms of percentage does he, as a crypto expert, have in the crypto market, he will say around 20%. Now, how is that in line with his identity? That must be very difficult for him because you would expect him to have 100% in, all in. You know, I want to say many other expletives here that are very, very male to describe how important it is to back your own identity. But he, as a crypto expert, understands the importance of spreading his risk. So, having your positions too large in any one particular market can be a risk factor, and also having too many positions. So, I'll give you an example. One of my traders who I've trained over the last few decades, oh my God, a few decades now, Jordan. So, I trained her, I would say, initially 28 years ago. She said to me, "The world is going to end. I'm moving to insert remote Queensland district here because the world is going to end." Did the world end? No. There's a war on over there, so therefore I can't be involved in that area. So I have to be involved in all of these other areas. And I've been listening to YouTube videos, and so I have to trade this and that and this and that, and I have to spread myself and diversify. And it's fantastic because now I have 500 positions in uncorrelated markets, which firstly, they're probably not uncorrelated, so don't kid yourself. Secondly, if you've got 500 positions or even 50 positions, you are probably duplicating somebody's index somewhere. So you might as well just do an index trade and be done with it. Have one position, it's easier to manage. So spreading yourself too thin, taking on too many universes, taking on too many markets just shows you can't make a decision. Love your
We're
thoughts
both
on that, Jordan.
we're both getting so passionate about this list. I can see both as we're going through this, we're driving it home, which is good, right? And this is what we're trying to do because we are passionate about it. We are saying, like, look, these are mistakes we see people make. I agree with the outlook of position sizing and how much you allocate of your portfolio to your skill. And I'm the same. You know, I pride myself on being an FX trader. Only 40% of my portfolio right now is in FX. I do all my analysis, all of my trade, everything. I'm an FX trader. Only 40% of my actual portfolio is exposed to FX. I think it's really important that you understand that and how you can spread yourself across a number of different assets and treat your trading like a portfolio. Not enough people do that. A lot of people think I'm trading account, that's it. That's the only investing I need to do. It's a whole portfolio. Diversify in different assets, even if it's in something like ETFs, okay, where you just kind of set and forget a little bit ish, right? But you can diversify, you can spread your money, spread your capital. I think it's really important. And then lastly, what you say there, I don't think there's anything I can say. You were too passionate. You were too passionate. But yeah, I agree. You can't have too many positions. You need to be able to know where your money is, where it's going, and to stay on top of the analysis to know when to cut the position, when to add to the positions. You need to be aware of where the whole portfolio is moving. So if you've got over 500, 600, 700 different tickers and different earnings and all this, like, geez, good luck. Like, that's just going to be too much. That's would you agree?
Absolutely, absolutely. I just find it interesting that people have overestimated the importance of diversification. At some stage, you have to realize you are not an index. And if you want to be, then trade the index. Much simpler. All right.
Something I've stuck to help a lot of beginner traders out there, something I've always lived by. If my personal trading isn't outperforming an index, my money's better in the index. I'll leave you
Nice.
with that.
I like that. Or ETFs, they're clever too.
Or
Yeah.
ETFs.
Yeah.
Yeah. All right, let's get into two more. Right? Let's get real passionate. Let's continue it. This is a good one. Neglecting education. Now, this is something that's really interesting because I'm going to talk to the guys that are maybe 2 to 3 years into their journey. Okay, so they've learned how to trade. They kind of know what they're doing. They might not be at the level of consistency they want to be at, but they know what they're doing. They know what a position size is. They know what assets they're trading. we hit a bridge where we just tend to, for some reason, feel like we know it all, like we've stopped, like that's it. We know everything we need now. Now we just got to build our plan. It's going to work. And what we usually see is a neglection of education. Now, there's a lot of different areas that we can look into this. There's the education on the asset that you're actually trading, understanding what it is, on the instrument you're trading. If you're trading CFDs, what is a CFD? How does that actually work back of house? And then down to the way that you're trading. And if you're not, we talk about it all the time, if you're not challenged and you're not growing, you will not grow. Like, you will not learn. So I want to put it out there. Don't neglect education. Don't neglect opinions. Don't neglect getting out of your comfort zone a little bit, because you need to constantly be learning. I know a lot of people say that. You've probably heard it from everyone. You need to constantly be learning, but let me drive it home. You need to be constantly learning, right? What is happening, where it's happening, why it's happening, and how you can capitalize on it. Those are the 4 pillars to being successful in trading long term, like to get that longevity. So I really want to drive home, don't neglect education, whether it be learning here at Mind Over Markets to better your psychological mindset, to be able to attack the markets a little bit cleaner, whether it be learning new strategies, right? Subpar here and there. We don't do any strategy talks here at Trade Delicious because I don't like doing that. But if it's learning new strategies, new techniques, learning new markets, right? Learning how the markets work. These are all parts of the puzzle in which I believe every trader needs to. So don't neglect education, please. Don't sit there and think, I know everything I need to know now. I can go and get in the markets, because you'll come a day where it'll just smack you in the face. Would you agree?
Oh, absolutely. I think there is also the equal but opposite side where people get too educated but they don't act on what they're learning. Now, I'll tell you about my friend Roy. So, way back when I had a real job, Roy was one of my clients, and then eventually he worked for the same company that I worked for. And oh gosh, I'm still in touch with Roy. I just think he's fantastic. So he was the one that said, you've got to get serious about trading, not just investing, right? He kind of spun my little head around on, ooh, you can get in and out even on the same day. Who knew? Rather than holding a position for a very long time. Now, Roy, still to this day, knows everything about everything. He genuinely is so smart. He knows how a stochastic is calculated. He actually understands the Black and Scholes model for option pricing. He can do all of the maths. He knows all of the software programs. He understands the best sources of data and how to make a decision. However, just remembering that I put my first trades on in 1990, has Roy ever traded? No, he still has not put money into the markets. If I have a confusion, if I have a point that I'd like to ask him about, I don't understand if you have an MACD histogram and you alter this setting, what happens? I can go to Roy. He is a fountain of all knowledge, but he hasn't used that education to apply it and to put his money where his mouth is. So don't neglect your own education, but don't expect just getting completely educated without putting your money into the markets will make you a success as well.
Beautiful. Beautifully added. And then the last little topic I wanted to jump into, not taking responsibility. Now, when I put this forward, I thought Louise is going to love this one, right? Because we've spoken on it a few times. Not taking responsibility. Last episode, we had a little discussion about this, right? On when you make a lot of money, when you lose a lot of money, the first place you should probably look is internal. Okay, what did I do that made this happen? Was it luck? Was it skill? What were actually the stepping stones for something to happen? Now, there's one thing I hear all the time, especially in the FX retail world. It's stop hunting. The market makers just didn't want to make me money. The markets are being silly today. It's just, there was just so many, I want to say, excuses.
The markets are being silly today.
I get all the time. Yeah, the markets are just being silly. Like, they're just being dumb. Like, it's just not, they're not trading how they usually do today. Right? I've heard them all. And I deem them as excuses. The market's going to do what the market's going to do. It's like throwing a marble in a jar and then predicting where it lands, right? The markets are going to go anywhere, but we can base probability off patterns. It's very important that we take responsibility for our actions. If you enter a trade and you put the money in your mouth, I love that you're doing that, right? I love that you got the balls to do it, right? And to get in and to put your money where your mouth is on your analysis. If it doesn't work out, don't look to blame. Don't look to blame someone else or the market, or perhaps the news data release come out, or someone said XYZ and this happened, or a certain analyst just says that was a stupid trade. Don't look to blame. Okay. Have a look internally. What could you have done better, and take responsibility for your actions? It's the best way and the quickest way to learn, in my opinion.
Jordan, this is such a great place to land the plane. You are a fountain of information. I love being co-hosts with you with Mind Over Markets. So until next week, happy trading.
Cheers.